Hi there, welcome back. You're still watching Market Cafe on ET. Now let's quickly talk about big boy Reliance's numbers that trickled in on Friday post-market as largely a miss coming in on all fronts. Revenue was down 2% sequentially, EBITDA down 9%, margins largely in line with what the street was expecting at 16.7%, and PAT was down 20%, so that's a little disappointing coming in. O2C EBITDA has also fallen 22%, retail EBITDA down 3%, oil and gas EBITDA is also down 7%. Now this is the biggest sequential drop in EBITDA in the last 7 years as well. So, these are in a nutshell what Reliance's numbers look like. Quickly also going to Reliance Jio, let's take a look at those numbers as well. Revenue EBITDA up 2% sequentially, margins at 52.6, slight expansion on that front. Net profit also up 2%, but ARPU was flat at 181.7 rupees. So, those were in a nutshell Jio's numbers as well. Growth was aided by subscriber addition. Overall, it's a miss coming in. O2C business, it's a miss. Retail business also a miss. Gas exploration largely in line, and telecom business also largely in line. That's what Reliance's numbers look like.
Well, absolutely. And let's also take a look at what brokerages had to say then. When you take a look at the view coming in from Macquarie, they have a neutral rating, but they've hiked the target to 2,750 from 2,630. What they're highlighting is a material miss across geo, retail, oil to chemicals as well. And they're also continuing to see downside to consensus EPS when we take a look at what Macquarie had to say about the big boy Reliance. And they're also talking about how consensus earnings updrift is something that they see meeting a roadblock. So that is something that they've also highlighted. Let's also take a look at what Jefferies had to say then. They have a buy rating on Reliance and they're cutting the target price to 3,525 from 3,580. They're talking about how rationalizing unprofitable parts in retail as well as focus on margin is something that the management has. And Jio should see strong growth post-tariff hike is something that they're also highlighting. In terms of their outlook on O2C profitability, that remains rather subdued in calendar year 24. So that is also something that Jefferies is highlighting. So that is the view coming in from both Macquarie and Jefferies. Neutral rating from Macquarie, but a hike in the target price, and a buy rating from Jefferies, but a cut in the target price coming in for Reliance then. But let's also move on and let's also take a look at what experts had to say, because we spoke with experts to get a sense of these numbers. Here's what we got from Mayuresh Joshi then.
O2C has been a slight miss, but we need to also understand that the overall environment where Reliance is operating in the O2C business has not picked up substantially. There is still hope that in the next few quarters, there will be some respite that comes through this line of business, which can provide comfort to the overall consolidated numbers. The second aspect, obviously, is in terms of their retail-facing businesses. Reliance Retail, a slight miss. One really needs to see the appropriate reasons for the slight miss that has probably come through. Jio, not too perturbed because the expectation largely is with the price hikes that they have taken. There will be some element of earnings improvement that will be on Jio standalone numbers that will take place. And even on the E&P side, which is the upstream business, there should be significant amount of improvement that you will probably see.
If you like this video, then like, share and subscribe to ET Now.